Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is homeownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, today CMHC announced a $1 billion commitment to acquire hotels and vacant buildings to home the homeless. Is this a wise investment by the government?
Well, I don't really think it's an investment by the government at all, Jim, to be quite honest with you. I don't think this is an investment by the government. What I think is CMHC has asked first-time home buyers in Canada to pay an exorbitant amount of insurance premium on their first-time home purchase. And that money, in turn, is being used today to make up for bad decisions by politicians for the last 30 years in terms of not taking care of the homeless. And now deciding to do it, Jim, when house price illusion is at its peak. They have taken billions and billions and billions of dollars from hardworking young Canadian families on the first home that those families purchase. Now, you can't just use the context of Toronto or Vancouver here. You have to take the context of across Canada. That means people who purchased homes at $100,000, $150,000, $200,000 as an entry-level house, beautiful entry-level house, in large parts of this country have been asked to pay $8,000 at a $200,000 home insurance premium to CMHC when CMHC knows there is virtually zero risk of ever having to use that insurance money. The risk is so low, Jim, so ridiculously low that CMHC pays a dividend to the Canadian government every quarter, giving them billions and billions and billions of dollars. So what you have here, Jim, in this case is you have a need that was created by politicians in terms of families, people who need subsidized shelter, which governments repeatedly have failed to address out of fear of not being voted in. This is a national and international phenomenon that has gone on now for decades. Had these governments been proactive and 20 years ago acquired properties at the trough of the housing market, you would have been saving, literally, Jim, probably $60 to $70 billion would have been saved. But no. What they're doing is the absolute worst timing of a market in the history of government procurement. They have awarded $1 billion to the local towns and cities who are desperately fighting to house homeless. And they're telling those municipalities now, when house price illusion is at its absolute worst, in the month when house price inflation is at an all-time record, immediately prior to the housing bubble being announced as bursting. You notice I'm saying, Jim. It's already burst. I'm saying being announced as bursting. These incompetent politicians and their staff at their municipalities who are not trained in housing markets or how to time a housing market are going to go out and buy the least amount of homes that they can for that $1 billion. They could have put in 3 times the number of housing units with that $1 billion, Jim, simply by moving into the market in 2010, 10 years ago. That would have been a stimulating environment to the economy coming out of the Great Recession. The money that they're going to spend now, Jim, is not going to be stimulating. They're going to be looking at buying up obsolete properties, which are outdated. They're going to spend excessive amounts of money renovating them. The new standards that they're going to have to keep up with are going to inflate the value of the cost of those units, and then they're going to put homeless people into them. Now, this is how we view things, Jim. How can the city of Vancouver, the most expensive real estate on average in Canada today, house price illusion, why would you think about housing your homeless in Vancouver? Why wouldn't you move your house? Why wouldn't you build beautiful housing units far out in the eastern part of British Columbia, near the Alberta border for the sake of the argument, some cheap community somewhere where you could have built a mansion for the same amount of money that you're going to try to house them in Vancouver? It makes no... Why do these homeless people get to choose to live in the most expensive part of Canada and then in turn have Canadian taxpayers, hardworking, minimum wage taxpayers, pay for their housing? It just is absurd, Jim. It makes no sense. Look, we are 100% advocates for those in need, those who need subsidized shelter. We believe that people who have drug problems should have been dealt with in the major cities a decade ago or 2 decades ago. We are not heartless. We are just practical in how we can get the most value, offer the most value to those people most in need. Now think about it, folks. They're going to house the homeless in Canada's prime cities. That means Victoria, Vancouver, Calgary, because Edmonton's too far north. It's too cold up there. The homeless are smart. They move down to Calgary. The Greater Toronto area and Montreal. They're also going to do it in Ottawa because, of course, in Ottawa, the government doesn't want to be exposed, walk around looking at their incompetence by seeing people homeless on the street. Why wouldn't they have moved these people, encouraged them to move, simply by offering them a higher quality of home in communities elsewhere? Think about it, folks. You're going to house the homeless in the smallest, tiniest living space possible in a city like Toronto or Vancouver. You're going to house them at the highest monthly housing subsidy needed placed on the taxpayer. Those people in turn are going to have to purchase all of their goods and services at a far more expensive rate simply because it's in these major cities. It is absurd thinking. But guess what, folks? All of your listeners out there who have a dream of home ownership, who have yet to own their house, who are maybe going to buy their first house, what's going to happen is the government is going to overcharge you a premium called mortgage insurance. When you purchased your first home, they are going to be sure that the home ownership infrastructure in Canada has created an artificially inflated house price, meaning you need the insurance only because the house price has been inflated to such an unrealistic value possible through government's own policies. Then they're going to take more money away from you via home ownership insurance, which in turn they're going to allow the homeless to live in the most expensive cities in the country. All the while, you're going to be paying taxes on the money that you had to earn. Because that $8,000 of mortgage insurance, that $200,000 home buyer in Windsor, Ontario, or Chatham, Ontario, or London, Ontario, or Kingston, Ontario pays, or Calgary, or Edmonton, or how far you'd have to go out. You'd have to go way out to Langley, okay, or in Langley. The money that those people pay is also an after-tax money. So the $8,000 may have cost some of those families $10,000 of earnings. It is just insane, Jim, what is going on. We fully support housing the homeless. We fully support giving the homeless the highest quality of life possible. We highly support doing that at the least cost to the taxpayer. There are already limited dollars out there that were available pre-COVID to be spent on Canadians. How much money from our healthcare is being diverted from our healthcare system right now because government politicians in their ineptitude are acquiring real estate, homes for the homeless at the highest price possible? Why did CMHC not come out with a housing the homeless bond program? Why did we not have a national housing the homeless bond program where Canadians themselves could acquire bonds which were used to fund housing the homeless, backed by the government of Canada, that paid them a total interest rate of 3 to 4%, 4 to 5 times what they would have got at the local banks with zero risk? Why didn't that take place? Because your politicians are incompetent. The people overseeing the housing market are incompetent. I use the word incompetent only because with data in a spreadsheet, I can prove they're incompetent. The decision that should have been made with housing the homeless was a decision in the last recession, at the worst part of the last recession. And the period before that was 2001, the last buying opportunity where you could have acquired real estate to house the homeless or even to build a subsidized housing. Now I want to leave your listeners with this thought. I live in Burlington, Ontario. I sold homes in Burlington, Ontario for 25 years. There was 3 generations of my family who sold homes in Burlington, Ontario. 3 generations. That means our knowledge of this marketplace is covered over 50 years. The subsidized housing in the city of Burlington are beautiful townhouse homes. They are beautiful townhouses. You would not know any difference between a subsidized townhome in the city of Burlington than you would from what homeowners have paid and acquired over the last 30 years. They are palaces. They have a square footage per household member that exceeds anything that is logical. I'll leave your listeners with this and this question, Jim. How many square feet of living space should be allotted for those in need of shelter, government-assisted shelter? How many square feet of living space do you think that they actually need? I'll tell you, folks, it's under 250 square foot per person. And when there's more people in the house, the square footage per person decreases. This was the dream of Canadians in the 30s and 40s, having a home this size. How come our governments aren't telling us how big these housing units are going to be? How many square feet per person are they going to be built? I will bet you money that they don't have a maximum calculation for the maximum number of square foot per person that they need to build to. But people went off to wars. World War II. People went off to World War II, risking their lives to come home to a home that was under 250 square feet per person living in the house. They had a quality of life that was exceptional in that number of square footage. When your tax dollars are being spent, or when your mortgage insurance premiums are being spent, understand you have the vote. You must demand that governments be held accountable.
We'll have more with Ross Kay right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, tomorrow the Bank of Canada has an interest rate announcement. A listener wants to know if mortgage rates could be rising. What's your take on both?
Take on both. Okay. So the first talk, interest rate, Bank of Canada tomorrow. They're going to leave it the same. They're in the interest rate trap. You are seeing everything that we've talked about in the show for years. It's coming home to roost. The interest rate trap is unavoidable. When you build an economy that requires a continually deflating interest rate in order to sustain itself, sooner than later, you can no longer sustain it by lowering interest rates. You could go negative, but that's a discussion for another day. The Bank of Canada cannot raise interest rates. Okay, folks? They can't raise. If the bond rating agencies come out and let's say when the first cracks of the housing market, they've already now all of a sudden all of these experts are now starting to jump on the bandwagon. Right now, here we are, 2 years into a housing market correcting, and they're now jumping onto the bandwagon about condos in Toronto, or these micro condos in Toronto, which are really not micro condos, by the way, anyways, folks. If you listen to our previous discussion today. Happening. The Bank of Canada, if the housing market starts to crash, the bond rating agencies are going to lower our debt rating, which means the Bank of Canada technically would be forced to raise interest rates or the Canadian dollar will plummet. Okay? Historically, that is what has always happened. This is not a debatable topic. This is how it works. The housing market dictates how foreign investors view Canadian debt. End of discussion. Right now, they're believing the Canadian Real Estate Association. They're believing all the crazy things that you have heard. Now, I want your listeners to understand this is what the Bank of Canada will believe tomorrow when it makes this announcement. They will believe Canadian Real Estate Association because CMHC has failed to expose them as a fraud. Okay? CMH staff of thousands of people cannot expose the Canadian Real Estate Association as a fraud because they have 30 years of data that says they believed Canadian Real Estate Association for 30 years. What that means is the governor of Bank of Canada is going to believe the value of the Canadian housing stock has increased over $400 billion during this lockdown. That's right, folks. The governor of the Bank of Canada believes that in a lockdown, Canadian homeowners have increased their wealth the same amount of money that the government has taken on in added debt to fuel CERB, CEWS, all the multitude of programs that are out there. The governor of the Bank of Canada believes, I stress the word believes, that Canadian homeowners are $400 billion richer today than they were in April. He believes that. And those who are watching the Bank of Canada, the bond rating agencies, you've read about them in the newspapers, UBS, Capital Economics, Moody's, all of these places that are now out there commenting about the housing market for the 15 millionth time since 2010. They believe the same thing. They believe it. CMHC believes it so much, they're pulling their hair out because they had claimed that housing prices were going to drop 16 to 21%. They're pulling their hair out. What are we going to say? There's been $400 billion of extra wealth built in the Canadian housing stock during this lockdown. It's absurd, folks. You don't grow the value of the housing stock by $400 billion during a recession. House price illusion does. And then for everybody who's wondering how you print money, how money is created, think about it, folks. Between April and September of this year, magically, there was $400 billion created out of nowhere in the housing stock. Magically. With Korea's magic math, there was $400 billion of brand new money available to be used in Canada. It's magic. Bank of Canada governor believes this. His staff believes it. CMHC believes it. Every economist believes it. The bond rating agencies, they believe this. Now, do you know anyone in this recession? Do you have a personal friend, listeners? Do you have a personal friend that in this recession has actually gotten wealthier? And the answer I know is going to be no, I don't. We don't. There's been a lot of people in tremendous amount of hardship. There are people losing their jobs left, right, and center. There are businesses closing left, right, and center. Everybody's out there begging for money from the government. Everybody. Wealthy people are begging for money from the government. Everybody's begging for money from the government right now. Yet they want you to believe the Canadian housing stock is worth $400 billion more. It's a crock, folks. All house price change between April and September was simply a result of compositional changes in the sales that were taking place. We have charts that show 5 prices based on the share of sales going to each category of home buyer that reproduces within $2,000 April, May, June, July, August, September, every single housing price released by the Canadian Real Estate Association. Now, it took us, months to go through the old data to separate it out to come up with those numbers. But we have those numbers. In other words, if CMHC was to call us today, if the Bank of Canada was to call us today, and they would say, hey, Mr. K, we heard you on House Street, and you said you can prove with a chart and graphs and numbers that house prices haven't changed between April and September. Could you just show us the five price categories that you were using? We can do that free of charge for the government. But we're not going to send them out a report. They have to call us. What could mortgage rates rise? The OSFI has set in rules and regulations with the B20 changes that allow the Bank of Canada to raise interest rates without it impacting the housing market. They can actually raise interest rates 1.5%, so they can go up to 1.75%. The Bank of Canada rate can be 1.75%, and the housing market doesn't have to move. It's not going to happen, though, folks, because the Bank of Canada believes there is an extra $400 billion of money has been printed in the Canadian housing stock, homeownership stock, since April of this year. It isn't going to happen.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener from Ontario, asks, we're considering renovating our kitchen. I'm wondering if that's a good renovation in terms of what it will do to our home's value.
Great topic. Great question. This is a question that we have watched reproduce, Jim, over and over again. Realtors say this is the best money on your renovation dollar. HGTV shows. You've seen thousands of these shows, thousands of these recommendations, and none of them, to us, are truthful. They're all factually wrong. We could argue how they're wrong from a real estate standpoint in terms of selling a house. Because after you sell a couple thousand houses, you understand what home buyers are looking for and what renovations, which we call immediate renovations. In other words, a renovation needed to put the house in the market and get its market value for it. We know what those things are. But I'm going to give this listener a different answer to the question. I'm going to give them a wealth-building answer to the question that every homeowner in Canada should follow. My answer is going to change depending which city you live in, and I think you'll understand that in a second. You want to spend a $40,000 kitchen upgrade. Okay, so if you have a $400,000 house and you spend $40,000, that's a 10% expense on your home. I will tell you that is commonly done. Okay? I will tell you that over owning a home for 30 years of $40,000 in kitchen improvements is going to be common. Okay? We're probably averaging right now around $32,000 for people who've owned for the last 30 years, and going forward, it's probably going to be around $52,000. But anyways, a $40,000 upgrade. Okay, depending on the city that you're owning the house in, depending on the type of home that you own, this answer will change. But the math behind the answer is going to be the same. There are certain cities in this country where a $40,000 kitchen upgrade will be recoverable. In other words, it's not going to cost you a penny. You're going to get the full kitchen upgrade back. All of the money you spent on that upgrade will be recovered in as little as 6 years. There are other cities, types of homes, where it's going to take you 12 years. There are other cities and homes where it's going to take you 15. And this is where it starts to get a little complicated in answering this question. Because we know that at the end of between 8 and 10 years, in a house that is lightly used by two people, the kitchen will be starting to show signs of needing work again. We know that if that is a family of 4 with 2 teenagers, after 8 years, it probably is already in need of a facelift. We know that if it is in an older home and the upgrade was done 10 years ago, a lot of the materials that were used are no longer in vogue right now. That's why we use these calculations, because it depends on city to city. Because as your housing stock changes, the preference of home buyers changes, which is why we laugh at when they talk about house price change. Obviously, if a home buyer has a choice between buying 2 homes, one with a kitchen that was renovated 6 years ago, and another house that had a kitchen that was renovated 15 years ago, even if the renovation from 15 years ago cost 50% more than the renovation of 8 years ago, the buyers are going to prefer the 8 year ago renovation because it is more in style with the trends that are out today. So a kitchen upgrade of $40,000 becomes a free upgrade. It also works this way, folks. If you own a $400,000 house and you put in a $40,000 kitchen, that's 10% of the property of the home and the land's value. You now have a $440,000 house. You should anyways. Let's say that on the day the kitchen is done, your house didn't go up $40,000. It went up 20. In other words, you're going to get 50 cents on your dollar on the day the renovation is completed. There are cities where as long as you own that house for another 6 years, even though it was only worth 20% improvement in the property on the year that it was completed, 6 years from now, because of the added inflation to the value of the house that you have had, under the way that your housing stock is structured in the city where you're buying in, that kitchen now is free. So you fully recovered your $40,000. There are other places where you add a $40,000 kitchen and 100% of that $40,000 is immediately available on the day the contractor leaves. If you were to sell your home, you would get the full $40,000. Also, because it raised the value of the home, over the next 8 years, you could get double. So not only did you get the $40,000, but because of the added value you have brought to the home, that $40,000 investment actually becomes $80,000  8 years from now. There's places, again, where that can happen in 5 and 6 years. Other places where it's 10 to 12. So when people talk about what is the best renovation what is the best spend of a renovation dollar, you can't just give a blanket answer, because we look at, when do I recover the money that I've spent? I mean, if you want to simply get a $20,000 upgrade because you're going to get or a $40,000 upgrade because you're going to get $40,000 of enjoyment out of a kitchen, and you're going to sell the house in 2 years, and you don't need to get any extra money, you're willing to give that $40,000 up, go right ahead. But this also, folks, goes to why timing the market is so important. Because if you build that kitchen in while in the trough of a trading cycle versus the peak, like where we're at right now, we're already over the peak, but let's not discuss that. If you were to have built that kitchen up, spent that money upgrading the kitchen in the trough of the housing market, when you acquired the house in the trough of that housing market, you can get double or triple the return on your money versus doing it at the peak, where you could actually lose. Or it could take you a few years before you start to recover the money that you spent. It changes from the city that you're living in. It changes from the neighborhood that you live in. It changes in the category of home that you're buying. It changes in terms of the age of the home that you're buying. That's how complicated an answer should be when it's posed to someone. Because basically, Jim, for around 85% of all homeowners, the information that you read online or from these so-called experts or from the stakeholders who want you to spend your money upgrading your home, it's simply wrong.
Ross, a listener from Alberta asked, since Ross, who said a dual minimum wage family can buy and own a home and live a wealthy lifestyle, in his words, in Canada, the question is, can a double CERB earning couple afford to own a home in Canada? And now they're calling the CERB something else, but it's essentially the same thing.
Yeah, now it's CERB without the E?
Yeah. That's good. I know, they used to
call
it the dole.
Yeah. It's the argument for a basic income, right? Universal basic income. It's the argument that they brought forward for that. Okay, which, look, I'm not adverse to making sure that everybody has a good quality of life, but I am adverse to taking out the competitive process that builds a society and produces excellence in a society. So the CERB question is, I believe, Jim, you're looking at $2,000 a month times 2, that's $4,000 a month, times 12 is $48,000 a year before tax. When you're in that income earning level, you should be expecting to spend somewhere around 54% of your income on home ownership. If you don't, then you should rent, okay? Because the way that the mortgage debt is structured today, the way the amortization table works today is, there's nothing wrong with spending 54% of your income on your home. Okay, now, everybody's going to say you're nuts. CMHC says 30%. It's just, we understand. In terms of a tenancy, no, you shouldn't spend more than 30% of your income on a tenancy, because you also have to save extra money. In other words, to buy other investments. If you're investing in your home, that's a different story, because you're paying down your mortgage every month. So not all of your income is going towards servicing your shelter. It's actually servicing your savings. You're owning an asset that, as long as you time the market correctly, is going to be appreciating over time. It's a double win. So there would be nothing wrong with spending 54% of your income when you're earning that level of income on your home. That works out to $25,900, so $26,000. We divide that by 12. Now remember, folks, that's still going to leave you realistically another $10,000 to live each month. Okay, now your house is taken care of, your investment is taken care of, your savings are taken care of all by your house. Your health care is taken care of by our taxpayer-funded healthcare system. So now you have $1,000 a month to do with whatever you want. I'm sure that a frugal family of two can live on $70 a month for groceries. I'm sure a frugal family of 4 can live on $150 a month a week for groceries. Okay, multiply it out, and you see what you have left over. When I say 54% of your income, I'm also going to say, okay, I'm going to take away some hydro from that 54%. So I'm going to take away $150 from the 2160. I'm going to say that I'm also going to take away some natural gas. 2160 minus 150, and we're minus 75 for gas. We're going to say that this works out for the course of the year. Okay, that's going to leave me $1935. I'm going to say that I'm going to buy a $300,000 house, and there's a 1%. Let's go. We're going to pay $3,600 in tax. So I'm going to take away another $300 in property tax. That leaves me $1,635. $1,635. I'm going to have to set aside at least $250 for renovations of improvements. So that's going to take me down to minus $250. That's going to take me down to $1,385. Now for $1,385, I can go out there and I can mortgage today around $300,000. $300,000. Okay? So you can move to a beautiful town in Canada, collect CERB, buy a $300,000, let's say a $250,000 home, and have a beautiful life. You can't do that if you want to live in Vancouver. That is your choice. You can't do that if you want to live in Toronto. That is your choice. You can't do that if you want to live in Hamilton. That is your choice. You can do that in Calgary. You can do that in Edmonton. You can do that in London. You can do that in Windsor. You can do that in Sudbury. You can do that in Kingston. You might even be able to do it on the outskirts of Whitby. Yeah, that would be tight. You'd have to be into the $300,000. So yeah, a double serve earning couple who chooses frugality of life and wisely chooses where they want to set down roots can in fact own a house on CERB alone. And this is why universal basic income is not a logical way for us to approach the problem of inequality. Because what it will lead to is, it will lead to a radical change in where people are housed, throwing all of the money, the billions and hundreds of billions of dollars that is being spent by the governments today in the trash can. Because they're no longer going to have to spend that money after the money's already been spent. When we talk about housing markets, housing infrastructure, the home trading infrastructure, the debt infrastructure in this country, we talk about it in a holistic viewpoint. It's one big package. It's one big package for one reason and one reason alone. Everybody needs to have a roof over their head. Everybody deserves to have a roof over the head. If you want to decide what kind of roof you have over your head, then you should have to work to get that. If you want to let someone else decide what kind of roof they're going to put over your head, that is your choice too. You shouldn't, though, say that this is the kind of roof over my head that I demand, and I demand that somebody else pays for it. That, my friends, is a different conversation for people way more intelligent than I am.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay. You can get questions to Ross by sending them to us at info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.